Another popular question that I've been getting asked a lot is what should investors be doing differently today based on the election results? I'd be hard-pressed to tell anybody that they should change their investment objectives based simply on elections. Investors' objectives really should be based around what is their goal and how comfortable are they with the amount of risk they're taking in their current policy or their current investments. This is usually determined by how much equity or stocks does one own and how are you balancing out the risk that comes with those equities over time with things such as fixed income or other type of investments. Over time, it does become necessary to either increase or decrease one's exposure to these different investments, but it's really based on long-term fundamentals and what the market is presenting us when it comes to valuations, earnings, interest rates, and other factors. Today at Raymond James, we are slightly underweight in our recommendation to equities, but this isn't based on what may or may not happen from the elections. It's simply based on where earnings have been most recently, where they had been trending, which up until this last quarter had been down, and where the risk in equities lie. If earnings continue to improve, as we've seen them improve recently, and if we continue to see improvements in the economy, which has also been improving, we will most likely be taking that underweight to equity off and go back to a neutral weight in equity. In addition to that, we have been recommending that investors own things like investment-grade bonds and other instruments to help them in their portfolio's ability to manage risk. Most of the risk in a portfolio comes from how much equity one owns. You will typically see these things change over time, but not based on elections. As I said earlier, it's really based on where the fundamentals are heading and what risk investors are taking in achieving their goals.